Well, I think it could be very significant. I mean, certainly, we're all on tenterhooks here generally in terms of the global trade. And of course, we're very concerned that, for example, relationships with China, spill out of control. So every time that a trade deal is actually reached, like with South Korea, which is, of course, a major trading partner, I think it gives confidence to the street, gives confidence to people on Main Street that, in fact, there is a legitimate end game and a level of the playing field that we're ultimately going to get to. So I think it's a positive.
So you think this new deal is bullish for markets, as Peter Navarro suggests?
Well, I mean, it's not as if South Korea is the biggest trading partner that America has, but nevertheless, I think it gives us some more confidence that, in fact, ultimately there is a rationale for these various trade disputes, and we are, as a country, able to reach a resolution in a way that's a win-win for both countries.
It really does seem like trade is still driving the equity market momentum. We saw stocks pulling back from the record highs that we saw last week. And when it comes to trade, it's really one step forward with South Korea, but two steps back with China, because what we have now is those talks being called off and those tariffs coming into effect. So do you believe that a deal with China is now looking further and further away? And if so, what does that mean for markets?
Well, certainly the fact that we're no longer going to have on the schedule a chance to sit down with the Chinese and talk about trade, that was a negative today, and I think investors pulled back a little bit. Having said that, of course, probably one of the big stories of 2018 is the market has powered ahead despite, some very fierce language and some very tough talk in terms of trade. We have, I think, the bullish rationale here is that ultimately both sides want better economies for their countries. Ultimately, both sides want more trade. There's a lot of posturing here. So I think ultimately the bullish case is that we will reach a resolution. Of course, ultimately America is more trading within more domestic-oriented economy, so it's less affected by the trade war. But nevertheless, China is a very important trading partner, second largest economy.
Yeah, absolutely. And it seems like you're right. Equity markets have brushed this off so far. We're looking at some YTD figures on our screen just a moment ago showing markets are still up this year. So how do you play it? What's the best strategy to implement towards year end if you believe that equity markets can continue to shrug off some of these trade headlines?
Yeah, so we're fundamentally bullish. I think the two key reasons. One is we still have a very low interest rate environment. With the 10-year Treasury at 3%, no one can make their numbers hiding in those kinds of returns. So any type of pullback, any apparent opportunity will be met with buying. Second, of course, we have a very strong economy, and that's really buttressed by those tax cuts at the end of last year, still providing a tailwind for corporations, tailwind for consumers. So ultimately, that's very fundamental. What I think is particularly healthy and what our strategy here is that, there's been intense interest in the FANG stocks. They're great companies, but valuations have gotten very full at best. But now we're seeing here in September rotation into other areas, industrials, consumer staples, and telecoms. I think that's very healthy. I think valuations there are quite reasonable. Dividend yields, for the most part, look very good relative to alternatives. And of course, we still got to get through October, but November, December tend to be very strong months in this market.